All right, good evening, everybody. Welcome back to Walks on Wall Street. Hopefully everybody is having a fantastic start to their Monday. Now, I tweeted something out last night, I think it was after the live stream, and I said that, due to the specific, just for lack of a better term, tonight I'm just going to use the term bailout. I know there's a lot of back and forth on that, but due to the bailout put in place by the Treasury, by the FDIC, and the Federal Reserve, I said that the market could very well be positive. Now, if you looked at futures overnight, we were actually, the S&P 500, if you look at the E-mini futures, they're up like 1.5%. Right as the market opened, this was about, a couple minutes after Biden was speaking, futures reversed and we were pretty deep red throughout the entire day. But if you look at the S&P, if you look at the Dow, we only closed down about 5 points on the S&P 500. Now, the volume was just insane today. The amount of turnover was pretty wild. And if you take a deeper look through the market, a lot of the broker dealers like Charles Schwab, if we take a look at that, I'm not even sure where it closed. Let me see. CHW, ticker symbol SCHW, closed down 11%, but well off its highs. Now, circuit breakers were hitting like crazy. It was a really, really volatile day. Charles Schwab Corporation took a massive dive all the way from $58 a share all the way down to $45. Rallied significantly throughout the day, closing at 51. It's interesting that JP Morgan Chase was about flat on the day. They were down about 1.8% or 2 points. And after this sort of bank run happened, right, with Silicon Valley Bank and the like, which we're not going to hammer on too much because we've covered it for 3 days now, the consensus on Wall Street is that you would have this mass consolidation and really big flight to safety to the big four, the big banks, right? You could think about JP Morgan Chase, ticker symbol JPM, Bank of America, ticker symbol BAC. But all the banks were down today, quite substantially across the entire sector. So you're still seeing a lot of fear in the market, but if you compare the percentage basis of those price declines between the mega banks, right, the Bank of Americas, the JP Morgan Chase, the Citigroups, and compare them to some of the regional groups, I mean, you can't even compare it. I mean, Bank of America was down about 6% today, but some of these regional banks were down double digits. I don't think, in my personal opinion, the contagion risk is too high. I do think that we may see a couple banks that, I don't really want to mention them. I think it's pretty obvious they've been blasted out on the CNBC and Bloomberg. I think you may have some risks there, but again, with this new lending facility with the Federal Reserve, I think everything should be fine. But the last thing I'd like to say about this before we sort of move on and cover price action in the broader equities market, and we'll talk about inflation because we're getting the CPI numbers out tomorrow. We gave that statistic that this week, about over 10 years ago, Bear Stearns, the CEO of Bear Stearns, actually came out and started to tell shareholders that there was no liquidity crisis, that everything was fine, and that the bank was very well capitalized. Well, 2 days after that, ironically enough, to the date, JP Morgan Chase actually acquires the bank or bails them out for about $2 a share. And then, we get plunged into the great financial crisis. So March is definitely not a pretty good month for the banking sector. I think we could all agree on that. But the bigger story of the night, which we're going to talk about throughout the live stream, it's going to be a wet one too, it's pouring, raining out, is the bond market. Now, before I head out, I want to actually copy and paste this link in the live chat for you guys. Or you can go to cnbc.com /bonds. If you look in the chat right now, everybody, you'll see it. And you can actually look at the yield curve in real time. Notice the difference in the yield on that US 1 year just in a day's move. I mean, these are, monstrous moves in the debt market. We were talking about why would I ever put my money in a bank, if the 1 year treasury yield is yielding 5%, that's 5% risk-free rate of return. Guys, the 1 year now, yields absolutely fell off a cliff across the entire curve. The 1 year is yielding 4.4%. The 10-year U.S. Treasury yield is 3.5% on the 10-year U.S. Treasury yield. And we were talking about, a 4 handle on the 10-year and a 5 handle, 5% yield on the 1 year. So crazy moves in the debt market. The last thing I would like to say is that if you think about this troublesome MBS portfolio, right, this portfolio of mortgage-backed securities, with yields coming down a bit here, that actually helps the situation. Because as we know, the problem with Silicon Valley Bank is they plowed about almost $90 billion into 10-year duration mortgage-backed securities at 1.5% yield. And as interest rates started to go up, well, you had huge erosion in the value of those bonds. So now that the yield curve is coming down, yields across the entire curve is coming down. This actually is, ironically enough, helping out the situation. All right. We'll talk more about that and precious metals tonight. Let me say hello to everybody in the chat. I see my good friend Ryan Beck. Welcome. Austin City Limits, good to see you. Lena Sandoval, there is here. Bill Rowlands, good to see everybody. Happy Monday to you. Alton, British Gray, Ron McAllister, Colleen, Lex S. Hopefully everybody had a pretty good day today, even though it was quite scary on the open. I really do think the worst of the contagion is behind us. As I've said before, fractional reserve lending and fractional reserve banking is all built on trust. And if you restore the trust in the banking system, people will stop freaking out, and you won't have those run on the banks. Toby Sanchez, good to see you. Welcome. Let's head downstairs. Now, I do want to say this. It almost didn't feel like we had a weekend. For everybody out there, it seems as if there was no weekend because all of this craziness was going on. So now that it's Monday, it seems like we have to live through another crazy week. So hopefully next weekend won't be wild. We won't have to deal with any more bank failures. Please God, we'll see. Hey, DJ Review in Under 2, welcome. Travel Nista is here. My friend Zoe. All right, let's head out here. I got my umbrella. I think I may have to put up my hoodie too. ETC says agreed. Yeah, I mean, I'm assuming, you know, if you've worked in banking or you even were working at a tech company or a startup, you probably had a very, very stressful weekend, let's just say that. Everybody, we are now reporting live on 6th Avenue and West 57th Street. This is New York City's Billionaires Row. Now, we're supposed to get this northeaster, however you call it, however you pronounce it, I don't even know, starting tonight and running through tomorrow. But I do have some good news for those of you who don't like snow. It's only going to be like a dusting to maybe an inch of snow in New York City, and then the temperature's going to get right back up to about 45 to 50 degrees. So if you're not a big fan of snow, it doesn't look like we're going to get any here in the city. But if I had to pick something, and if I could say, hey, you know, let's get snow or let's get rain, I wouldn't mind getting 7 inches of snow as long as it's dry powder, because this is kind of just a mess, right? Tomorrow, we're going to have a situation where it's snowing, then it's sleeting, it's slushy, it's icy, and to me that causes more inconvenience than, you know, just downpouring rain. I don't know, what do you guys think? Would you rather have downpouring torrential downpour like we have now, or, you know, 7 inches of dry powder? Hey, Hawaii, what's up? Good to see you. I could definitely say I'd much rather be in Hawaii right now. Vincent is here, welcome. Nancy says, I love the snow, looks kind of fluffy. Yeah, and here's the thing, we never even got any snow all year in New York. I mean, the only snow that we got in New York City, I actually think was about 2 weeks ago, guys, and I was here for it. And it was only flurries, there was no accumulation on the ground, because it really wasn't that cold of a winter. It was kind of mild. You know, the only time it was really cold in New York was on Christmas. It was below zero on Christmas. It was ridiculous. It was miserable streaming in it. But hey, TC is here. It says, good evening, Tom and crew. Welcome. ETC333 says 7 inches of dry powder easily, no sleet or slush. Dude, 1,000%. Okay, real quick before we jump into the conversation, for all those non-New Yorkers, and for all those New Yorkers out there, you know that whenever it snows like crazy and it's not dry powder, anytime you try to cross the street right here, it becomes like a frozen, icy tundra lake, and it's almost impossible to navigate and cross the street. So I would much rather have 7 inches of dry powder than like a mix of rain, sleet, snow, and slush, for sure, without a doubt. Hey, Michael Joseph is here, says it's raining 2 days, and of course, perfect time for the clocks that wrecked my sleep. Dude, I didn't even know about that. I just kind of went with the flow. But yeah, what is daylight savings time over or something like that? Line Sync is here, welcome. Frank says any day above freezing is a good day. DM says good evening, Tom and everybody. I prefer soft snow. Well, I guess everybody has their own preferences. We got a Tesla taxi over there in the distance. Check out this dog crossing the street. So we'll jump right into it. For all of those gold bugs out there, and any precious metals investor at all, it was an amazing day for gold and precious metals in general. If you look in the middle of your screen right here, you can barely see it. That's 432 Park Avenue. It's so cloudy and so windy and so rainy out that if you have an apartment probably above the 50th floor at 432, you're literally living in the clouds tonight, which is kind of interesting to see. But what I was going to say is, and it really makes sense, right, guys? Because if you think about the value proposition of gold, of silver, of platinum, palladium, right? These are, time-tested stores of value, and you usually have these big flight to safety moments, especially at a time like we have, right? We had one of the largest banks in the United States go under, and it spooked a lot of people, right? It scared a lot of people. There was a lot of uncertainty. So you saw tons of money flow into gold. If you have tradingview.com or Bloomberg Terminal or MarketSmith, whatever type of charting service you use, you could look at gold futures, or you could just look at the paper derivative. Look at ticker symbol GLD today. Even though gold was up about 2%, look at the volume on that move. I mean, it was like a stampede into gold, into precious metals today. Silver also had a good day, and the digital gold Bitcoin had an unbelievable move. You're talking about 2 consecutive days of $2,000 price rallies for Bitcoin. I think right now we're trading just below 24,000. Here we are, everybody, on West 58th Street. This building that's very luminescent in the white light is 220 Central Park South. And then the building just behind it to the left is Central Park Tower. We are walking down New York City's Billionaires Row tonight. Richie M says, yep, that's right. And surprisingly enough, the fact that we had bond yields come down so significantly today, we actually saw quite a big bid in a lot of tech stocks, which is kind of funny because if you think about the broad-based exposure of Silicon Valley Bank to a lot of these big VC firms, they invested in a lot of tech companies. So you wouldn't think that, to the average person, you would never think that the day after, the first trading day after a major banking collapse that has such gross exposure to Silicon Valley and tech startups, you probably would never guess that tech companies would be up. But if you think about it, I want everybody to think back to, maybe 3 or 4 months ago when we explained this in detail. And if you think about a tech company, right, let's just use one of these software as a service or SaaS companies as an example. One of the reasons why these companies performed so well during 2021, real quick, this is the FDNY 23 Engine 23. It's conveniently located right next to 220 Central Park South. And before I make that quick comparison, notice all of the original buildings here in New York. It's such a stark contrast to what Billionaires Row is now. I mean, Manhattan back in the day used to look exactly like this. These old style buildings with the beautiful fire escapes. And now Billionaires Row is peppered with all of these ultra high, very thin glass skyscrapers. The one we're looking at right now is 157. That was actually the first building that kicked off the trend of Billionaires Row. The main developer on that was the Extel Group. And funny enough, right here, team, we're standing directly under it. This is Central Park Tower, which is brought about by the same developer, Extel Group. And then obviously you have 220 Central Park South. But as I was saying, in 2021, the stocks that performed really, really well were a lot of these sometimes unprofitable SaaS companies, right? Software as a service and tech companies. Because we were living in an environment of ZIRP, zero interest rate policy. The Federal Reserve was actively buying agency mortgage-backed securities and treasuries, expanding that balance sheet and providing liquidity. So if you think about a discounted cash flow model, right, as interest rates go up, the present value of a company's future cash flows decline. And today, look at the yield curve today. Before we, really got into the live stream, I posted a link to cnbc.com/bonds, right? So you could see the entire curve in real time, all the way from the 1 month, all the way to the 30-year. And I have never in my life, right? I'm 27 years old, so I haven't per se traded through the great financial crisis. I have never before in my life seen the forcefulness of the movements in the bond market like we saw today. The 1-year Treasury went from over 5% to I think 4.5%, and the 10-year U.S. Treasury yield went from 4% to I think 3.5%. I mean, those are huge moves. So it actually kind of makes sense that tech companies caught a little bit of a bid here. It's very strange, very, very strange, but usually the most unlikely outcomes are usually the outcomes, unfortunately. Hey, TC says, hey Tom, do you think yields for T-bills will start decreasing? Well, I mean, that's the thing, TC, that we were just talking about. They already are. I mean, again, I would really encourage everybody, go to cnbc.com/yields, /bonds, and you can see all the maturities and the yields of all those different bonds. So real quick, I want to call out this building. Right here is the Trump International Hotel and Tower. This is right here at 59th Street, Columbus Circle. Mike C says the bond market seems to be overreacting. Ryan Beck says, how do we feel about the CPI tomorrow? That's another thing, man. Now, I'm a little bit nervous about it, and I'll tell you guys why. Because if CPI, the consumer price index, essentially the inflation numbers, if they come in hot tomorrow, or I should say above expectations. Now, I think consensus on Wall Street is for about 6%. Is that right? Can anybody confirm that? I think today, not today, but I think consensus on Wall Street for CPI is about 6%. I think if we come in over that, that could be pretty bad, because if we come in over 6%, right, let's say we get like 6.2 or even a big number like 6.5%, and if the Federal Reserve doesn't raise interest rates at the next FOMC meeting, oh, look at the Tesla taxi right here, guys. You see it? I've never been in one, but and if the Federal Reserve doesn't raise rates, I think that's going to panic the market, because the market is going to interpret that like, okay, so inflation came in hot and the Fed is not raising rates. The market's probably going to interpret that as they're probably scared shitless, excuse my language, about the Silicon Valley Bank situation, and they probably can't raise rates, or they think there would be more contagion in the market. Who knows? Adam is here, says, hey Tom, greetings from Los Angeles. I worked in construction where First Republic is, a huge project lender. I have chased and crashed all checks from any First Republic project, says Adam. Yeah, I mean, First Republic is another one of those that I think a lot of people are concerned about, but I don't really want to spread any more fear or contagion there, but I definitely do see your concern. Hey, FredX is here. Welcome, Fred. Good to see you. Joseph says money flowed into mega cap tech stocks and defense. Yeah, I mean, Apple was up almost 2% on the day, wasn't it? All right, we're going to walk down Central Park South. Let me try to read some more of your chats here. Again, it's raining out, guys, so it's going to be hard for me to read every chat. I'm seeing a comment. Somebody said, hey, Tom, what do you think about the CEO of the bank selling stock right before the collapse? We did talk about that. In my view, the way I interpret that is I think it's a big ethics lapse. And I was on a Twitter Spaces today, and the former CEO, I think, of HSBC was on. And he was sort of giving his perspective of the whole thing from his perspective when he was the CEO during the great financial crisis. And I think he got his start at Salomon Brothers. And he said, you know, essentially this is what he was trying to relate to the audience. And I thought it was quite fascinating. And maybe some of you guys could chime in here. But he said, look, I'm an old school banker from Salomon Brothers days, and it seems like all of the new generation of bankers and new generation of Wall Street CEOs that are coming up here, they're all happy to participate in the winnings when everything is doing well, and deposits are growing and the economy is doing well. But the moment stuff hits the fan, they start dumping massive amounts of stock, and they leave their customers hanging. He was sort of saying, and I'm sort of trying to not misquote him here. He was saying, during my time at Salomon Brothers, it was all about the customer, right? It's like you go down with the ship, and quite the contrary here. I don't know who said it in the chat, who asked that question, but yeah, I mean, it doesn't look good, right? I mean, imagine if you were a customer, and I'm sure many customers of Silicon Valley Bank have probably listened to this stream. But imagine if you're a customer of Silicon Valley Bank and you find out that the bank is collapsing, and then you get news that all of the C-suite was dumping stock. You sort of feel betrayed. You sort of feel used in a way. Like the C-suite and the employees, I'm not saying all employees of the bank, but at least the decision makers didn't really care about the customers. That's how I interpret it. Now, I'm not a customer of the bank, but if I was a customer of the bank, that is exactly how I would interpret it. That they don't care, and that they're acting in self-interest, right? When you have turbulent times, if you want to run a company the appropriate way, you need to stand by your customers and help your customers, not worry about cashing out $3 million worth of stock. So, I don't know, it was a bit disappointing for me to hear that. I don't know, thoughts there? Wendy Inglis' all management of SVC have been fired. Yeah, well, now they have, absolutely. Absolutely. Oh man, it's so windy. Let me try to... Millen says, do you think the government is going to bail out SVB from taxpayer money? No, so I mean, that decision has already been made, right? So for those of you who don't know, if you type !press, so !press, PRESS in the chat, I programmed the Nightbot to actually drop the link of the press release from the FDIC, from the Secretary of Treasury, Janet Yellen, of exactly the bailout plan. Now, no taxpayer dollars will be used to bail out SVB. Now, I understand and I get it, right? We could debate this for hours. Technically, depositors, I guess in theory will be paying the price, because essentially what they're going to do is FDIC is funded by banks, right? So banks pay fees and they pay premiums into the FDIC funds. So essentially they're going to be raising that. And a lot of people are saying, well, they're just going to pass that cost on to depositors. I get it. But in essence, you could sort of say that about anything. But again, if you want to read that press release, that outlines exactly the bailout program. But, in other news, sort of talking about the reaction to that, here we have the JW Marriott Essex House. This is one of my favorite hotels here. Got yours is not sure I really ever think that my banker cares. I expect only that they have self-preservation to keep their job, and that they hopefully want a long career in their industry. Care about me, never. Yeah, I mean, I'm not going to argue your point. Everybody feels a different way. But, yeah, I mean, guys, after the 2008 financial crisis, I mean, the perception of bankers on Wall Street is not the best. I mean, would you all agree? I mean, the perception is pretty tarnished. And I don't think this sends a good message to the community. We sort of talked about the in-depth. If you guys want to watch the stream from last night and the night before, we did an in-depth sort of analysis on exactly what caused this crash. Check out this shot, everybody. So in the distance, these towers right here is the Deutsche Bank Towers. And it was formerly known as the Time Warner Center, but now Deutsche Bank has taken over the name. As you know from doing the live streams in downtown Lower Manhattan, Deutsche Bank actually used to be located on Wall Street. That was their main headquarters here in Manhattan. But now they have migrated up here to Columbus Circle, which is actually a much nicer location, by the way. Al Baker says this will pump the brakes on raising rates. So let's actually talk about that for a moment. I know we're kind of be all over the place again today, but I'll give you guys my take. And I said this on a Twitter Spaces today, and actually a lot of people materially disagree with my analysis. But I think at the next FOMC meeting, which is going to be next week, by the way, so it's pretty much here, it's in 8 days, I think if the Fed comes out and announces that they're not going to raise rates, if they're going to pause, I think that may actually create more panic. Because think about it this way, right? We just went through a major bank collapse. Let me wipe the camera lens here. I'll probably have to do that a lot tonight. It's pouring and it's windy too. Anyway, if the Fed comes out, because, okay, let's just do a quick preface for those of you who may be new to the conversation. Just as of last week, guys, the futures markets were pricing in a 50% probability for a 50 basis point rate hike. So just keep that in mind. Last week, before, Silicon Valley Bank decided to crash the world, I'm being a little bit facetious there, but, futures markets were pricing in a 50% probability for a 50 basis point rate hike. So that has been communicated and talked about on mainstream financial channels and on, more insider Wall Street information. So if you have the Fed come out and say, hey, we're going to pause, we're not going to raise rates, we're just, we're going to see where things go, I think the market's going to interpret that as, oh man, they really think that this bank calamity is going to get a lot worse, and I think that could spread even more contagion. But if they follow through with their plan and just say, all right, we're going to raise interest rates by 25 basis points, I think that would actually instill more confidence in the market to say the Federal Reserve is confident that even though they're continuing on their path of quantitative tightening, they think that their new lending program to bail out depositors will actually work and it won't cause any contagion. I don't know, any thoughts there? Because if Fed Chair Jerome Powell comes out and says, hey guys, we're going to pause, even though futures markets were pricing in a 50% probability for a 50 basis point rate hike, people are going to start asking questions and they're going to start panicking again. Who knows? Hey, Dan Zhang says, hey Tom, thanks for doing the stream in the rain. I also think the Fed will continue raising rates. Pushing the rate hike will cause more uncertainty. And plus, yields have come down materially across the entire yield curve today. We sort of talked about that too. Crypto Hoarder says, I agree. Arbode says, Tom, earlier had a moment of pause and instinctively went to your page. Of course, Tom live streams at night. When is it less congested and hot? Yeah, that's true. Thank you so much, R. Ryan Beck says, I think 25 basis points is a happy medium. Now, Nomura came out. Well, I'm sure you guys saw the news about Goldman Sachs. So Goldman Sachs comes out late last night. I'm not even sure. I think it was after our live stream, was it? I forget. I mean, things have been moving a mile a minute. But it was breaking news. Goldman Sachs says due to the events that happened with the huge stress that is being put on the banking system, we now don't forecast any rate hike at the next FOMC meeting. And then today you have Nomura coming out and saying that they think they're going to cut by 25 basis points. I mean, in my view, and again, this is just my opinion, so don't, take this to the bank. If the Fed cuts rates at the next meeting, I think that's going to cause absolute pandemonium, because people are going to be like, oh my gosh, we were just talking about, we were talking about, possible 6% on Fed funds rates, and now we're going to cut. So the market's going to interpret that as, oh my gosh, they must really think this Silicon Valley Bank thing is going to explode the financial system. So I think in order to keep heads level, right, in order to keep a level head here, if I was the Fed chair, I would just do a 25 basis point rate hike to show the market that we're being very steadfast with achieving our goal of killing inflation and not spooking the markets any more than they are now. So, yeah, Michael Joseph says, you think they're going to pause till May? I mean, it's possible. I just think that would do more harm than good because, you know, guys, in essence, and I was having a lot of conversations about this today. I think the vast majority of what's going on now is people freaking out and sort of screaming, you know, fire in a crowded theater. Now, make no mistake, and we've reviewed this almost to the point of ad nauseum. So for those of you who watched this stream yesterday and the day before, you understand this. This was gross negligence on the part of the management at Silicon Valley Bank to take very, very concentrated duration risk on a portfolio of mortgage-backed securities, right? In addition to making very risky venture loans during this time as well. But all of the other banks, and I'm not going to say all, I'm just using all as a broad general term here, are fine, right? Especially a lot of the big banks. They are stress tested and they are fine. Their balance sheets are durable. But you guys got to understand, on Thursday, there was $44 billion of withdrawals coming out of Silicon Valley Bank. No bank in the world could have withstood that. None. Zero. Okay? And I think the average American who is really, you know, asleep at the wheel, and I'm not saying that in a bad way, not every American should be, you know, a finance savant and understand how the fractional reserve banking system works, but I think everybody is becoming privy and learning about the fractional reserve banking and lending system we have, and they're waking up and they're saying, wait, if I put $1 million in the bank and I'm looking at my Chase app, that $1 million isn't actually there? What? And it's freaking a lot of people out. So it's true. If you deposit $1 million in the bank, your bank then lends it out. They're making loans. You know, they're buying safe government-backed bonds. That's how a bank works. But, you know, this Silicon Valley Bank thing, I think, is an isolated incident. It's a very egregious incident that could cause a lot of contagion. But I think there's a select few actors out there that are scaring the crap out of people and telling them to move their money when I don't think the concern is there. Everybody, we are now at 5th Avenue. You were looking at the Apple store. This is the main flagship store on 5th Avenue. And the rain is definitely coming down like crazy. Little Larry Sellers says, Tom, when will we start believing Jerome Powell? He said he will raise rates until inflation is dead. He has not altered his path after markets have melted trillions. The man is on a mission. Yeah, I mean, little Larry Sellers, that's another really good point. And, you know, that really ties in, and this is the Plaza Hotel, by the way, for those of you who don't know. This is a very, very famous and iconic hotel at the southernmost east, I should say southeast part of Central Park. Really beautiful here. Hey, Who Dat Dave, welcome. So to little Larry Sellers' point, if you understand, right, and we've been over this multiple times, the Federal Reserve is unwinding, or I should say undoing, about 14 years, right, over a decade of quantitative easing and artificially suppressed interest rates. So I want to make this one point, and I was on a Twitter Spaces the other day and I was making this point as well, because a lot of people are like, you know, if Silicon Valley Bank owns, why would they buy, you know, 10-year mortgage-backed securities at 1.5%. Essentially, they were trying to be a little bit greedy and make a little bit of yield on their money, right? Because think about the time that we were in, right? This was 2021 when bonds were yielding nothing. But every single bank everywhere is holding a lot of these bonds that their realized value or the mark-to-market value is significantly lower from when they purchased them. Because if I'm going to buy a mortgage-backed security that's yielding 1.5%, it's not just SVB, right? It's JP Morgan Chase, it's all of the banks, right? So as interest rates have gone up, right, nearly 450 basis points in less than 20 months, that has absolutely crushed the value or the face value of these bonds. And it wouldn't be an issue if you were able to hold them to maturity. But again, as I say, we live in a fractional reserve banking world. And since we've kept interest rates for too low for too long, when you try to unwind that in less than 20 months, you're obviously going to have a lot of bag holders of people owning bonds that their values are cut in half. And topple that with the bank run, you have a magic elixir for disaster. So here we are looking at the Apple Store. Again, this is the flagship Apple Store here at 5th Avenue on the corner of 59th Street. This is actually open 24 hours a day. So if you want to buy an iPhone 14 at 3 o'clock in the morning, this is definitely the place to do it, my friends. Sunshine After Rain is here. Always a pleasure to see you. Thank you for being a great moderator. Paul is here. Says, do you think there can be anything done to start and regain the trust of bankers again? Or is it just a case of time healing the wounds? Well, I think that's a really good question. And my answer is going to sound like I'm sticking up for the bankers, but I'm not. And so I'd sort of like to explain my position here. Because Main Street, right, and we've been over this before, but I think it's appropriate just to quickly cover it again. The city actually looks really beautiful with the rain coming down. Even though I'm freezing, the scenery is really beautiful. I love how the lights kind of reflect off the asphalt here. Anyway, if you think about, now Main Street, in their mind, they looked at the news on Monday or over the weekend and they said, oh my gosh, not again. The bankers did it again. They crashed the world, these greedy bankers, right? And they have every right to think that, by the way, because in 2008 was so egregious and unethical. But this is very different, and I'd like to explain why, if you'd allow. If you think about what was happening at a lot of these banks leading up to 08, right? So I'd say from 2004 leading up to the crash, the banks were making very, very risky and I would even say at times unethical loans, right? If you think about a lot of the underwriting standards at a lot of these banks, they were almost laughable, right? So if you looked at the balance sheets of a lot of banks leading up to the great financial crisis, they were loaded with a lot of toxic derivative assets. They were loaded with a lot of subprime loans. And that's actually not the case this time. It's really not. They were buying, right? Let's just use the fact of Silicon Valley Bank. They were buying very safe and government-backed, okay, treasuries and mortgage-backed securities. They didn't have toxic assets on the balance sheet. Now, you could argue that, well, Tom, what about all the venture debt? Yeah, I understand that. But what really caused the problem, right, that spurred the bank run, is this MBS portfolio and treasury portfolio that was purchased when bonds were elevated and yields were suppressed. And it just so happened that now that rates are going up and you have to realize those losses, well, you have a recipe for disaster. So it's not like, it wasn't super malpractice where, bankers were forcing people into, ARM loans and adjustable rates and doing very bad things. Guys, check this out. This is a really cool shot here. So we're walking down 5th Avenue from 59th Street. Check out the steam pipe. Oh my God, that thing is pouring out steam. Brendan O'Brien says, yeah, but how did they not hedge the interest rate risk when the Fed began hiking? Yeah, so Brendan O'Brien, you're 100% right. And that is why I blame 100% the management, right? And you could consider that greed, right? So what Brendan O'Brien is talking about is the interest rate risk or the duration risk on those bonds. right? They took almost about $90 billion and hammered it in to these mortgage-backed securities, right? And they didn't have any duration risk. Now, you could also say that at the time they were being very greedy, because if they invested it into short-term treasuries, yes, they would pretty much get no yield, but they would pretty much be protected in an event of a bank run, because the money frees up in 3 months, 6 months, and the like. You get the picture. But they were greedy, right? In my view, right? I don't want to mind read. I can't read anybody's mind. But at the time, if you're going to buy 10-year mortgage-backed securities at 1.5% yield, when you could have, to be more conservative, bought shorter-term treasuries at a lower yield, well then, yeah, you could argue that that was greed. And I would agree 100%. Hey, Sharon Lee is here. So this is why they need to have more regulations, because they're so greedy they can't help themselves. Yeah, I mean, we could go down the whole regulation path and argue that until the cows come home, and I get that. But again, in this situation, like a lot of people were saying, Dodd-Frank would have prevented this. I mean, maybe, I don't know. I mean, maybe it could have, but in my view, I don't really see how it could have, because other banks that had appropriate risk management didn't find themselves into this situation. It goes back to, they just didn't know the basics of portfolio management 101. Guys, this is exactly what I was talking about. Look at this. This is like exactly what I was talking about at the beginning of the live stream. So here in New York, whenever we get like a really bad snowstorm or rainstorm, at the corner of every crosswalk, you have at least, this must be like a 2-inch puddle, maybe like a 3-inch puddle. Now the problem is when it snows, this is a icy, snowy, rainy mess, and it's almost impossible to cross the street every time. Over the next couple days in the city, I think it's going to be an extreme mess, especially if it gets a little bit colder and we get some snow. But you already see the water starting to puddle up here. That's definitely the one thing I don't like about being in the city during the winter. Dan Zhang says, Tom, can you believe that SVB didn't have a CRO for like 8 months? Yeah, I heard about that, and I actually just learned about that. I didn't know that. I mean, maybe a regulation could have prevented that. I mean, I don't even know how a CEO of a company would let that. You don't have a chief risk officer. I don't know. Look, as the days go on, I think I think we're going to start to see a lot more data coming out too, but we'll see. Hey, Ron McAllister says, did Silicon Valley Bank approve these loans for startups? We are in pre-funding phase, and we're talking to angel funders. I'm just wondering if these angel funding agencies had a line of credit. Well, that's another problem, because if you think about, and again, not to sort of beat on this subject, I want to try to move on, but that's a good point. Silicon Valley Bank, the value proposition there is, let's say if you were a startup and you finally, you raised your Series A, you did a great job, and you have a VC that's going to come in there and give you money for your Series A. There was about a 50% chance, right, that your VC would tell you to go bank with Silicon Valley Bank, right? Which is almost what caused the bank run in the first place, because venture capital is a very, 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 very small world, especially in California there in the Valley, right? Everybody knows everybody. So when you had Peter Thiel, tell his entire portfolio of startups to rip money out of the bank, you don't think word got around that, oh my God, one of the greatest investors of our history, probably even in the entire world, Peter Thiel, is telling all of his, startups and the founders to rip money out of the bank? I mean, you don't think that caused contagion? I mean, we could argue that. I don't really want to argue it, but I mean, it obviously was a big factor. And that's the thing, the vast majority of people who banked with this particular institution were people in the VC and the startup community. And chances are, if you work in venture capital, you definitely know who Peter Thiel is. So, But if you're trying to raise money, do I think it's still going to impact founders trying to raise money in this environment? I think so. I mean, even before, okay, let's just quickly review even before the major banking collapse. But really quick, I'll show you guys. This is actually the Trump Tower. So on the right side of the tower is actually the residences. So a lot of people don't know this. There's a ton of really, really beautiful apartments in this building, but there's also commercial space, as you can see here with Gucci and the like. So if you do rent a unit in Trump Tower or you own, that's the entrance right there. Now the International Business Center, or I should say just the business center in that building, is amazing. And I'll quickly tell you guys a story. I've told it a million times, but maybe we have some new people here. So I had to meet one of my clients one time, and he has a place here, but I think it's on the 5th floor is their business center. It is so unbelievably gorgeous, by the way. I would like to say that, but when I walked into the business center, everything is brand new. There's TVs everywhere, like these big, Samsung 70-inch TVs. And on every single one of the TVs, the only channel that was on was CNN. I thought it was so hilarious. You would think that, when Trump was president, it was all fake news. CNN is fake news. Every freaking TV there was programmed to CNN. It was absolutely hilarious. Hey, Valerie's here. It says, read the book of Daniel and... Oh, okay. Guys, just respectfully, no religious stuff in the chat. It tends to get people riled up. But I totally respect all religions. But, Bible verses in the chat and stuff like that, it's just kind of, So speaking of another bank that may be in trouble, First Republic Bank is right across the street here. But from my understanding, and I know a lot of people who bank with First Republic Bank, this is actually a great bank. Now, I'm not saying put your money with them. I'm not saying take it out. I'm just making generalizations here. But if you look at the stock price of First Republic Bank, I think it was down almost 50% today. Now, as a general rule of thumb, what I'm using to gauge risk, obviously you could look at the balance sheet and the exposure to some of these longer term bonds. I actually think they have a line of credit with JP Chase now, First Republic, I think. But just look at the stocks that are down the most, right? JP Chase, Citigroup, Bank of America, even though they're down, they were only down like 3 to 5% today. A lot of the regional banks, some of these banks were down over 15% today. So I think if you wanted to look where there could potentially be, maybe a little bit of contagion, I would just look at the stocks that are down the most. Soho is here. Good to see you. Welcome. Hang with Mark. Good to see you. Let me try to wipe the screen as we come up on 432 Park Avenue here. All right, everybody, this is 432 Park Avenue. This is probably one of the most noticeable buildings here on Billionaires Row. Check out how tall this thing is. Now, it looks like the top 10 floors of this building are actually not even visible. That's how cloudy it is. So imagine if you own the top penthouse in that building. Right now you have no view because it's literally in the clouds. That would kind of be insane. Hey, JP is here. What's up, JP? This is long time no see. Channel has grown so much in the past few months. Congratulations. Yeah, we got a pretty awesome group here. I appreciate you guys watching. It really means a lot. It's kind of fun doing these. Mitty Matty says, hello, love watching your streams and very valuable information. Well, thank you so much for the conversation. I appreciate it. I always say without the viewers, there's really no stream. You guys are the ones that do much of the conversing. Road Dog is here, says, how come people in New York don't like cigarettes but will let you inhale their crap from those steam pipes? Well, I walk around and I see a lot of people smoking here, unfortunately. unfortunately. All right, I'm gonna walk to Park Avenue here, because this is actually where the real Wall Street is. This is where many of the firms are. But then we're actually gonna head back into Midtown. We'll go to Radio City. But I sort of want to point out and highlight, right, because we've sort of beat this Silicon Valley Bank story, I mean, into a pulp. I think everybody really has a solid understanding of it. And here's how I view it at the end of the day. The decision has been made by the FDIC, the Treasury, and the Federal Reserve, and I don't see much value in, at least now, in arguing about, you know, was the decision the right thing to do? Did they cause a moral hazard? Did they not? Yada, yada, yada. And this is coming from a person who's pretty much a pure free market capitalist, right? Big free markets guy. And I'll tell you why, okay? I'll tell you why. Because if we're honest about the situation, let me actually get away from the stoplight so you guys could see the 425 Park Avenue building a little bit better. Now, this building is very significant to Park Avenue. I'll tell you guys why in a minute. But think about the situation, okay? And the regulators and the federal government, by the way, had less than 48 hours. Okay, so think about this. The federal government had less than 48 hours, and the Federal Reserve and the Treasury had less than 48 hours to provide a fix to this problem. Because, you know, for the people who are saying we should have done nothing and should have just let the bank fail on Monday and depositors would have been screwed, I actually disagree with that wholeheartedly, because you guys got to understand something, right? If on Monday the story broke that, oh, depositors are totally screwed, that would cause such freaking pandemonium, because people that aren't really savvy and privy on the financial markets and who watch it all the time are just going to see a headline that says, oh my God, this guy that's a big VC guy or that's a head of a startup, he lost all his money in a bank. That guy looks really smart, and that guy has an MBA from this and that. If he's losing money in his bank, what does that say about my bank? So it would have caused a massive, in my view, systemic bank run for no reason. Because the reality is, our banking system in the United States is actually stable and more solid than it was in 2008. This is a bank run, right? A classic bank run. And we live in an environment, or the world, of fiat currency and fractional reserve banking. So technically every bank in the world, well, in the United States, is prone to these bank runs. Now, again, what exacerbated the run? It was horrible, egregious management decisions to manage this portfolio of mortgage-backed securities, and they were pretty much insolvent as of a year ago, if you really think about a mark-to-market basis. So I think it's easy, right, and I try to have an open mind as much as possible. I think it's easy to kind of play, you know, Monday morning quarterback to say, oh my gosh, you know, the Federal Reserve made a bad decision, and so did the U.S. Treasury. But guys, I mean, they literally had, you know, less than 48 hours to literally save America, right? So I think they did an okay job. The good news is that taxpayer dollars will not be used to bail out these people, and which it shouldn't. And equity holders or stockholders of this bank are going to go to zero, and so will bondholders. And what I'm hearing is that those executives at Silicon Valley Bank that sold stock a couple days before the collapse, they're probably going to claw that back, which I think is good. So I think for the situation that we were working in and the total rock and hard place that Silicon Valley Bank put us in, you know, I think the Federal Reserve, the government, and multiple other organizations like the FDIC did a pretty good job, I would say. Yeah, Adam says a lot of my friends who work in tech, didn't get paid on Friday. The ripple effects continued, and that's it. Yeah, so things like that, like they couldn't cut payroll. Sabrina Fair, welcome. Thank you for joining. Dan Zhang says, Tom, are you shocked that even without a CRO for that long, but no one in that bank thought of portfolio hedging? Well, they must have known, right? They must have known the problem, because if you look at a lot of the earnings reports and the earnings statements, I should say the earnings deck, right? You saw deposits leaving the bank for months, for quarters, for multiple quarters, right? And again, this has to do with, you had a huge boom in venture capital, and then once interest rates started to go up, literally the VC spigot turned off, right? No VCs were writing checks, at least not to the level that they were during 2021. So you had a situation where a lot of these startups were drawing on cash, right? Because some of them are unprofitable and they have very high cash burn. And the management at the bank were probably saying, oh my gosh, time is ticking for this. We're probably going to have to sell some of these mortgage-backed securities to cover withdrawals. And I think they only sold about $2 billion worth of the MBS, but that sparked Moody's to issue a warning on the bank. And when Moody's issued a warning on the bank, very smart people like Peter Thiel and the like looked into the situation, and they're like, my God, dude, you could go insolvent, and they caused a bank run. Now guys, we're now looking at Jefferies. This is a major bank here, mainly an investment bank. However, anyway, right here, Madison Avenue and East 53rd Street. Very interesting looking building for sure. Hey, Paul Medes is here, Michael Joseph. Michael Joseph's balance sheet was not good when rates went up, you're right. Road Dog, welcome. Hang with Marks is my friend in tech, makes over 100K, so not getting paid over the weekend didn't make them panic. Well, I mean, it made a lot of founders panic who, had their whole, Series A checks in there and they couldn't cut payrolls. I think that was more of the concern that a lot of people were worried about. Yeah, did some very rich billionaires have money in there? Yeah, they did, but I think I was more concerned about all of the companies who had all their money in there to cut payrolls. I mean, that was my concern. But team, we are gonna now head down to the one and only Rockefeller Center. But if you've been enjoying the live stream so far, feel free to leave a like on the video. Hit the subscribe button if you're new. We do these live streams about every night starting at 8:30 p.m. And share the show with your friends if you want. Wow, look, you can't even see the top of One Vanderbilt tonight. It's so cloudy. That's crazy. We'll head back over to Fifth Avenue. I just wanted to show you guys Jefferies. But, let's sort of pivot and talk about the reaction that the market had today. Now, if you look at, and again, whatever charting software that you guys use, a free one is tradingview.com. But if you have Bloomberg Terminal or a MarketSmith or whatnot, take a look at a weekly chart of gold, right? You could either look at gold futures or you could look at the paper, which is ticker symbol GLD. Now, we just broke back above 1900 on gold again. Now, I'm not a gold bug, I don't have any exposure, but I tweeted this out today. If you guys want to follow on Twitter at Walks Wall Street. We put in a high of around 1900 on gold in, I think it's September of 2011, right? Was that the swing high? And ever since then, we've been trading in this range, essentially going sideways for more than 12 years. So think about that. We have now had a 12 12-year consolidation in gold. And this is probably the largest cup with handle pattern I've ever seen in my entire life. And today's price action, and it's always funny because, you know, I'm always a fundamentals first and technical second, but fundamentals always tend to cooperate with the fundamentals. Really quick, this is St. Thomas Church. We are on the corner of East 53rd Street and 5th Avenue. This is one of my favorite churches in the entire city. Check out how gorgeous the architecture is here. But I always say, you know, that the fundamentals will tend to line up with the technicals. They always tend to cooperate with each other. And you would think, you know, we had a major banking failure, a banking collapse. And then the next day when the market opens on Monday, you have an incredible amount of cash moving into the precious metals market. And not just gold, by the way. You know, take a look at silver. Silver had a big day. Platinum had a big day. Palladium had a really, really big day. But it wasn't just in the price percentage, right? It was in the volume. I'm not sure. Maybe you guys could look this up for me. But gold, if you just want to look at the ETF for the paper, GLD probably traded well over 100% of average daily volume. I mean, at least. Back above the 50-day moving average and back above the 200-day moving average. If we break in the new all-time record highs for gold in this environment, I think I would probably have to start an allocation because the measured move on that is significantly higher and the fundamentals are cooperating with the technicals, right? In this environment, you know, even though we had this big bailout for Silicon Valley Bank, and two other banks went under too, Silvergate and Signature Bank. Even though we have this bailout, I think it's safe to say that a lot of people were really, really scared over the weekend. Is that safe to say? So I think we're starting to see people say, look, you know, I can't afford not to have an allocation to gold. And you could even say the same thing about Bitcoin. I mean, Bitcoin today was up 10% again. We had back-to-back days of 10% gains. So I don't know, I'd keep my eye on that for now. This is the Cartier building. Anybody in the chat have an allocation to gold or any thoughts there? Anybody bullish gold over the long term? What do you guys think? Hey, Richard Vogel. So that's safe to say for sure, Tom. Brendan O'Brien says conditions for future inflation with rates falling is also great for gold. That's true. You know, rates came down significantly. And if you really think about it, this quote-unquote bailout by the Fed, it's technically kind of quantitative easing, is it not? Because if they're going to buy these bonds back at par value, isn't that QE? I mean, I guess they will never tell you it's QE, but to me that's QE. I mean, if you're expanding the Fed's balance sheet and buying bonds, that's technically QE, no? So quantitative easing, definitely bullish for gold for sure. Yeah, I know. Brad's Brain says Tom Bill O'Neill would be proud of this cup and handle, but buying gold just not for me. Yeah, I mean, look, I don't have an allocation, but I think that if we do break to all-time record highs, I think I'd have to, you know, at least get an allocation going up. DC322 says that's more risk-reward stuff on bonds and the other stuff. Flat Smack says I'm more of a collector of precious metals. Hey, Adrian Palmels, what's up, dude? Long time no see. Adrian says hello, good to see you. Lilith says, Tom, my 83-year-old mom is freaking out over the bank collapse. Don't know how to calm her down. You know, see, that's what I was saying. Like, isn't that the analogy that I just gave? And again, I am a pure capitalist, but when it comes to the banking system with people's deposits, you're going to freak a lot of people out because there's a lot of seniors out there, right, that are living on a fixed income. So play this one out, right? You know, you're a senior, you have, you know, $800,000 in the bank, you're living off Social Security, and you see on the news everybody's scaring the hell out of you about this Silicon Valley bank collapse. to you, you're going to perceive that as, well, if a bank collapsed and all of these very smart and wealthy people are investing in that bank and trusting their money and deposits with that bank, and if that collapsed, well, what does that mean for my bank? I can't afford to lose the $800,000 because that's my life, that's my retirement, and you're going to scare the hell out of people. That is why I'm a little bit more flexible here to say, look, somebody's got to make a statement and say that depositors will be made whole to calm people down. And so we had about 48 hours to fix the situation, and I think we did as good of enough job as we could with the information we had. So ensuring that depositors will get their money, okay? At the same time, punishing the people who created the mess by allowing the stock to go to zero, right? So equity holders are wiped out and bond holders are wiped out. I think that was the right thing to do. And there's no real right or wrong answer here because it's so difficult. But that's reality, that's the world. Guys, check this out. This is St. Patrick's Cathedral right here. Yeah, Blues Writer says it makes the FDIC irrelevant. It's a sticky situation because now, in theory, every single depositor, no matter what, is totally insured. Which, look, I don't know what's going to happen. They're going to have to, do something about it. But, I think the alternative would have been a lot worse in my view. But here we have St. Patrick's Cathedral here. One of the most stunning cathedrals in the world, in my view. Maybe one day on the live stream I'll take you guys inside St. Patrick's if I can get off of work in time. But we are now standing outside of Rockefeller Center, 30 Rock. This is 630 Fifth Avenue is the exact address. I'll give you guys one more look at St. Patrick's Cathedral here. Now, I would like to take everybody back to reality for just a moment. And what I mean by that is, let's consider this, okay? And this has been my biggest concern. And I've said this multiple times, but I think it's so important that we watch this, okay? That we keep a very, very close eye on this. I am most concerned about commercial real estate. That is my biggest concern. If you want to drill down even more, I am very concerned about large companies, by the way. I almost stepped on a heroin needle. Large companies, or I should say big investment management companies, right? Like the BlackRocks, the Blackstones, the KKRs, the big players that were buying tens of thousands of units of multifamily property, right? And these are solid assets, so it's not like they're bad assets. There's the needle I almost stepped on. But, these are solid assets. But here's the thing. They acquired these multifamily properties with floating rate debt. A lot of them did, which is very surprising to me because, maybe the thought process there from the Blackstones and the BlackRocks and the KKRs of the world is that, okay, unemployment is at an all-time record low. Even if Fed funds rates go back to 3% or 4%, with unemployment so low and wages going up, we'll just be able to raise the rents on our tenants and they'll be able to absorb that. But I don't think they were taking into consideration that it's possible for Fed funds to go to 5%, right? That is my concern. So very soon, everybody, a lot of that debt is going to re-rate. And I'm not convinced they're going to be able to raise rents high enough to be able to cover the payments on that debt. So I do see an opportunity, right? And if you think about all of these crises, think about every single financial crisis that we've been through in the United States, every single one of them has been the ground floor opportunity to really, really level your life up. I mean, to make some serious money. It's sort of like, buying real estate in 2012 and 13. I think that's what may happen here in multifamily real estate for investors, big investors that use floating rate debt. I think a lot of these good Class A properties, these multifamily units, could potentially go back to the banks. So just remember I said that, because a lot of people, I think, may get caught off guard here, because the focus is actually on the regular consumers. The focus is on residential real estate, where people are saying, hey, the single family homes, the duplex, the triplex, those people are going to get screwed. Those people, their homes are going to go back to the banks and lose 50% of their value. I actually am predicting the exact opposite. I think since these people are well capitalized, right, 85% of all outstanding mortgages in the residential space, right, so 1 unit to 4 units, they have less than 7% fixed rate debt. They can afford to make those $2,000 payments. If you have rates really, get cranking here, which I actually still hold the belief that they will, I think you're going to see a lot of trouble here in commercial real estate and big multifamily with people who got greedy using adjustable rate debt. Herbert, thank you so much for your very kind donation. You are extremely kind, and I appreciate you. Herbert says, Tom, the U.S. government has a long history of bailing out banks and other companies. This is just another example of banks, airlines, and autos, etc. I do agree with you, but I think this time around it's a teeny bit different. But I definitely see your here. Hey, Daniel G, what's up? Says, hey Tom, how you doing? I hope you're doing fine. Daniel G is joining us from Buenos Aires, Argentina. Thank you so much. Hope you're holding up down there in Argentina, my friend. Evan Weeks says, dude, I still have my actual family here just north of Atlanta. I'm working remote for the company in New Jersey. Oh my God, dude, crazy. Wow, that must be wild. Yeah, I mean, look, you know, and here's another thing. Let's talk about sentiment for a minute. So let's take, you know, Evan Weeks' example. He's like, look, I want to, you know, I want to find an opportunity so I could move my family out of the South. You know, if I had to make a bet, and just from, this is an observation just from talking to, you know, friends and family this week, you know, this incident really freaked out a lot of people. So, and there were also depositors at Silicon Valley Bank that were literally in the process of buying homes in the Valley, the Bay Area, and whatnot. I really think that they're probably going to put a pause on those plans, right? I mean, when you have something as shocking as this, I mean, you got to understand something. There were people, you know, this weekend that literally thought they lost their entire life savings, right? You know, people not as familiar with history of, you know, banking bailouts in the United States. I kind of knew that depositors were probably going to be made whole, but there were a lot of people who literally just thought they lost everything, and I think that really scared the hell out of a lot of people. So I think you may see a national slowdown of spending. So I wouldn't be surprised to see in the next couple, you know, quarters here, consumer sentiment numbers absolutely fall off a cliff, and existing home sales continue to go down even more. I wouldn't be surprised. I think people are going to start to put a pause on things and just to see, you know, what this market does. I don't know. Any thoughts there? Do you think that this incident, even though depositors are saved, right, quote unquote saved, and they're going to get their money back, do you think this is going to fundamentally change human sentiment and human behavior? I do. I actually do. All right, everybody, we are now outside of Radio City Music Hall. Now, I think Radio City looks absolutely gorgeous in the rain. And I think the reason why it looks so gorgeous is because the signage here is so different than anywhere else in the city. You have these big, bright red, blue, and white neon lights. It's almost like you're kind of time traveling. It's really, really nice. Hey, Lemonade is here. Good to see you. Joseph Hardaway says, Tom, yes, most definitely will change the sentiment. That's what I'm banking on. I'm seeing a lot of people says yes. Hang with Mark says, Tom, it will just alert them to diversify like they should have been diversifying all along. Potentially. Emily K says, Tom, which two banks closed today? I heard on ET tonight. Wow, so you heard about the whole Silicon Valley Bank fall on Entertainment Tonight. That is wild. And that's such a good perspective. I'm so glad Kimmy said that, because somebody told me this the other day. They're like, Tom, you also have to understand, you're living in your little sphere of influence of the people you hang out with, you know, in your personal life, in your work life, and on financial Twitter. There's a lot of other people in the United States that, you know, and rightfully so, like not everybody should be focusing on the stock market and the banking sector and the economy every waking second. They should be focused on their families. They should be focused on their personal life. They should be focused on their jobs, right? Whatever that may be. And you can sort of, and I fall victim to this all the time, I could sort of get like clouded in my own little sphere, and I get out of touch with what other people are thinking and doing. And it just goes to show of my sort of argument that I made earlier in the stream, that if we didn't guarantee depositors, you know, regular Americans, everyday people, would have been really, really freaked out. So to Kimmy's point, the major bank that went under is Silicon Valley Bank, right? But depositors will be 100% guaranteed, so there's nothing to worry about. People are going to get their money back 100%. There's going to be no taxpayer bailout. And FDIC. We also had two other banks go under. one of which was Silvergate and then Signature Bank. And now, funny enough, walking around New York City, Signature Bank, oh, are we buffering? Yeah, we may have to walk downtown. Signature Bank is a New York-based bank that was closed down by regulators. Now, Signature Bank was, I don't really want to use the term crypto-focused bank, because that's actually not an appropriate characterization. They did bank a lot of cryptocurrency companies, but when people hear the term crypto bank, they think that the bank was speculating on Bitcoin and things like that, but they were just banking crypto companies. That bank is going under. Shareholders will be totally wiped out, as well as bondholders, but depositors will be made whole. Everybody, real quick, I want to point out across the street, here you have the News Corporation building. So the News Corporation building is on the corner of West 48th Street and Avenue of the Americas. And this is actually home to Fox News, Wall Street Journal, Investors Business Daily now, and Barron's. So 1211 Avenue of the Americas. And this is First Republic Bank. First Republic Bank has been in the news a lot today as well. Hey, Oscar says, what's the situation with Chase Bank? Well, I'm not familiar with the situation with Chase Bank. Now, again, there's a lot of rumor mills about other banks, but the theory is, if a lot of these regional banks go under, everybody's just going to have a big flight to safety to the big four, which is JP Morgan Chase, Bank of America, Citi, and Wells Fargo, which I actually don't think is healthy for America. I think we need to have a very robust banking system to cater to needs of all Americans. I don't think it's really a good idea just to have, Jamie Dimon and Brian Moynihan, running the entire financial system. I don't think it's a good idea. Speaking of Bank of America, if you look right here, unfortunately it's very cloudy. We're going through a big storm here. That is Bank of America Tower. Yeah, so Blues Writer says Charles Schwab took another hit today. Now, the volatility in Charles Schwab's stock was ridiculous. Maybe Blues Writer, you could look up the exact amounts, but I think Charles Schwab sold off to about $43 a share and rallied all the way back to almost $60. I think it was down about 20% on the day. Here's another one of these ridiculous puddles I'm talking about. The snow is supposed to start, I think tomorrow at 2 o'clock. August Ice's Goldman Sachs dipped today. Yeah, but here's the thing about, I'd like to say this. The entire banking sector took a hit today, but the most vulnerable sold off the most, right? Like the regional banks. I think Wells Fargo, Bank of America, and JP Morgan Chase were only down, I think the spread there was like 1.5% to 5%. I think Wells Fargo may have been down 6%, but yeah, Michael Joseph says, Tom, JP Morgan Chase might be the safest bank in the US. Yeah, and I guess it's the theory of too big to fail, right? And that's the exact theory, and that's what's really gotten a lot of people scared over the last week, is that, well, why should I risk the chance, putting my money in a regional bank when I could just put my money with Bank of America or, with Jamie Dimon over there at JP Morgan Chase, because those banks are too big to fail. There's no way the Federal Reserve and the government would let JP Morgan Chase fail, right? But, I think that's, again, in my view, I think that's very bad for the country. I think if everybody thinks like that, we're not going to have local banks, and we need to have local banks to service the needs of local communities, especially for the agricultural system and many, many others, right? You don't want a banker in New York City, talking to a dairy farmer trying to help him run his operations. You want a local banker doing that understands the industry more, who understands his needs more. So let's quickly cross here. We're going to head down to Bryant Park. Now, guys, tomorrow is a big day on Wall Street. Very, very big day. We are going to get the CPI numbers out. So this is the inflation data. And I was talking to my buddy today. My friend actually works at a startup, believe it or not, who was impacted by the bank collapse, but now they'll have access to all their funds. But his particular company, and I guess it's really not important to tell you, but I will anyway, whatever. It's an AI platform that essentially will pull data from 10Ks and 10Qs to automatically help analysts build different financial models like discounted cash flow models and the like, which is actually really helpful. I mean, I don't know if the company will be successful or not, but I think I would use something like that, because when I'm building my financial models, right, I'm going to sec.gov. It's a very laborious process. So to have a software that can, essentially plug and chug and automatically go to the 10K, the 10Q, and rip all of that data and plug it into a financial model automatically, I think it would help a lot of people, and I think it actually may replace a lot of analysts too. Anyway, so here's what we were talking about. We were talking about the CPI report that's going to come out tomorrow. Now, consensus on Wall Street is that CPI is going to come in at 6%. Now, here's the interesting thing. I think it's more important, and I catch myself doing this all the time, and I want your guys' input in the chat, guys and girls out there. It seems as if at times we can get so caught up in the data and the numbers that we could just look and pick our heads up, look around outside, and look in our everyday lives what's going on. And here's what I mean by that. People are saying, oh, if CPI comes in above expectations at 6% to 6.2%, people are going to flip out. The way I think of it is, okay, let's say if CPI comes in at 5.9%, are people going to be really happy? I mean, just look around in your daily life, right? Do you guys think, right, you guys go to the grocery store, you guys put gas in your tank, you guys pay your utility bills, you guys pay your rent, you pay your mortgage. I mean, what are you guys seeing in the marketplace? Are you seeing grocery bills go down? Are you seeing your gas prices go down? Are you seeing your electricity bills go down? Is your rent going down? Maybe, you just broke your lease and you're moving to a new city and you're looking for a place to rent. What are you guys seeing in the marketplace? I think that's more of the important question. Sometimes, wow, this is a really good shot of Empire State Building. Sometimes we can get so caught up in the data and the numbers when we could just, use anecdotes and say, look, am I going to the store and are things ridiculously expensive still? So I want to ask you guys, have you been seeing any material improvement in your personal life as it relates to inflation, or are things actually getting worse? Are you spending more money at the grocery store? Are you paying more money at the pump? Are you paying more money for rent? Does your landlord want to raise the rent on you? I'm curious to see. I'll read the comments. I'm curious to see. This is Times Square right in front of us. Sharon Lease is going up. Adrian Palmer says, Tom, my grocery bills are very, very high. Ken Glass says, Tom, cost of living is still going up, and up for me. Stuart says, everything seems to just be spiraling out of control. Joe Driver says, lackluster times. Otto says, definitely spending more on groceries. Richard says, prices are going up and ridiculously high. Wow, really? DM says everything has increased for me. We don't have one positive comment about prices going down. Roche Hill says, Tom, everything is going up in my world. Wow. Lupe says, Tom, my boyfriend's landlord increased his rent by $200. Now, Lupe, you obviously don't have to disclose where that is, right? But I think it'd be helpful, just so we can get a gauge on the different market you're talking about. Because here in New York City, guys, I'll give you a little bit of a look into my world. Food is just out of control. I mean, it's really, really ridiculous. Especially when I'm down in Miami. I've been starting to go to the gym a lot and train and roll jiu-jitsu when I'm down in Miami. And that requires me to eat a lot of food. So I've been buying, New York strip steaks, chicken breasts, and the prices, guys, I walk out of the store and I'm like, wait, I spent $70? And I just can't, I'm like, dude, I bought like 2 steaks, and a couple bags of mixed vegetables and onions and potatoes. And I'm like, that was $75? It's just like, it's crazy, the food prices, at least in my world. And I'm doing the majority of my shopping. I usually cook a lot when I'm in Miami, and the prices down there are ridiculous. I think they're almost as ridiculous as New York City. Unfortunately, it's getting really, really, really expensive. Will M says $75 and you were using a basket, not a cart. Yeah, exactly. That's what I'm saying. Now, many of you, I understand. You'll say, well, Tom, you're buying red meat and you're buying steak, which tends to be more expensive. And I get that, but I mean, $75 more expensive? I don't know, man. It's, look, and I'm not trying, and this is not being political in any way, by the way. I'm just basically stating, my experience, because we have the CPI numbers coming out tomorrow, which could move markets significantly. NBA Elias says, Tom, airline fares are still brutal. San Francisco to Phoenix paid $350 for one way last week. That's another thing. And glad you brought that up, because I'm seeing the exact same thing. You guys know I fly back and forth between New York City and Miami. My inflation number on airfare is 150% year over year. Sometimes more. It is very expensive now. I used to be able to buy a one-way ticket from Fort Lauderdale to New York, right? JFK, Newark, or LaGuardia for $70. It's like $150 to $200 now. It's crazy. All right, guys, this is the Stephen Schwarzman building, the New York Public Library. Hey, Wayne McKay says, Tom, I've downgraded from grass-fed top sirloin to grass-fed chuck roast and to non-organic chicken thighs, and my bills are still going up. Yeah, it's a bummer, man. I'm paying like crazy too. Lilith says, Tom, my former apartment complex in Tucson, Arizona raised the rents by $200. That's because of people coming in from California. Wow. Now, you would think, everybody, that rents would start to come down. I'm actually starting to see some things come down and loosen up here in New York. I am. Especially if you want to talk about buying an apartment here in New York. In some of the newer buildings, I've told this story many times, but I keep getting these emails from select new developments as an incentive to close on a deal. They're offering about 1 year of prepayment for your HOA fees. So at least they're trying, right? At least the pendulum is moving from a seller's market to a buyer's market. I still think prices will come down materially in the real estate market. I still hold that belief, but it seems like it's taking a lot longer than I've expected. Let me just admit that. All right, let me cross the street here at 5th Avenue. If you guys don't mind, I'm just gonna get out of the rain for a moment. I think we'll take a quick walk around Grand Central Station because I don't want to get too wet because the rain is definitely picking up. Brian says, Tom, I try to accumulate airline miles and points to save money on my flights. I should probably do that. Party Cat says, I just bought a 5-pound chuck roast from Aldi 2 and cut it up into 8-ounce strips for breakfast. What was the prices on that? Silversmith's, a safe haven today was gold. What is your comment? Yeah, so Silversmith, we covered that earlier in the stream, but I think it's appropriate to maybe cover it again. You're exactly right. I think the highlights today on Wall Street, without a doubt, was precious metals. You had gold is back above 1900. Silver went on a rocket ride today, platinum, palladium. So precious metals did really, really well. And also digital gold did really well today, in addition to precious metals. Bitcoin had 2 consecutive days of just face-ripping $2,500 candles, up about 20% in 2 days, which actually makes sense, right? I mean, I think, in my view, Americans lost a little bit of faith in our banking system this weekend, right? And I'm not trying to be negative, I'm not trying to stoke fear. You know, that's the reality. I think the average American didn't lose all faith in the banking system. I think, you know, what the Federal Reserve and the FDIC did restored a little bit of that faith. But I think it scared the crap out of a lot of people. And I think that's why you're seeing this flight to quality. You know, precious metals, gold. You know, in the case of Bitcoin, you own your own private keys. You are technically your own central bank. You could self-custody. So, yeah, I mean, Bitcoin, gold is over 1900, back above the 250-day moving average. Silver was up big. And we'll see if this rally can continue. Does anybody know where futures are trading at right now in terms of S&P, Dow, and NASDAQ futures? All right, so we're coming up on Grand Central Terminal right here. Lex S says, is Wegmans still considered the best grocery store? I think so. Wegmans is great. Dog says, thank goodness we have an option to fly from Cancun to Tijuana instead of Cancun to San Diego. Half the cost for us. Wow. You know, I'm a little bit scared, guys, honestly, about, you know, the stuff that's coming out of Mexico. I think the Biden administration issued a warning to tourists to not travel to Mexico. Did anybody see that? Guys, look at that. That's my umbrella. My umbrella literally just flew away, bro. You guys see that? That was wild. The umbrella broke and totally jackknifed into the street. That was insane. Thank God we salvaged that. That was literally what happened to our banking system over the weekend. Good thing we got it back on the stick. All right, well now here we have the gorgeous Art Deco building, the Chrysler building. Was that not nuts? Guys, that was ridiculous. What the hell happened? All right, let's head inside. I gotta close the umbrella. Maybe that's a sign for the markets tomorrow. Maybe we'll get a little bit of a rally, but you know, to pull us back to reality, the major equity indices are still well below their major moving averages. You know, we're still well below the 50 and 200 day on the S&P. So I think, you know, we're bearish until we could break back above those key moving averages. Man, it's good to be inside. We'll take a quick walk around the beautiful Grand Central Terminal. All right. I know, the LT Prod, right? It's actually a pretty good bakery. Oh, that's right, it's St. Patrick's Day. Hey, Jared Covey, thank you so much for your very kind $5 donation. Always good to see you, my friend. This is RIP Umbrella. Yeah, I mean, the umbrella's fine. It just ripped off the handle for whatever reason. I don't know. I don't even know how that happened. I don't even know how that was possible. But yeah, this weekend is St. Patrick's Day. And in New York City, I think the parade is still going to go on, I think, hopefully. Can't believe it's already almost April. Thank God. I mean, guys, you know me. I can't stand the winter. I can't stand the cold and the rain and the wind. I hate it. Can't stand it. So the closer we get to April and May, the closer we get to doing these live streams in 75-degree weather, and that is the best. Hey, EM, good to see you. Welcome. Beacon, New York says Art Deco architecture is nice, but not brutalist like the MetLife building. I'll give you guys a quick shot of the ceiling here. See the mighty bull. Joan Case, futures are green. Hey, everybody, look who we got. It's our good pal, our friend and our moderator, Michelle. Michelle McGraw, good to see you. Hopefully you're well and you're getting through the winter in one piece. You know, it's not supposed to be like crazy snow here, but like a dusting. But still, I mean, the weather is horrible out. It's teeming raining, it's windy. So hopefully it's a lot better where you are, my friend. Well, thanks for joining. It's always good to see you in the chat. Love seeing you. Now, this is the Apple store. Speaking of Apple, I think Apple was up almost 2% on the day. Hey, Chris Tompkins says, what do you think about CMBS and REITs these days? No collapse in sight, even with major cities being half empty. Chris, thank you so much for your very kind donation. Now, that is actually one of my concerns, and we did briefly touch on this, but commercial real estate is one of my main concerns as it relates to the real estate sector for obvious reasons, right? We had the big C. We can't say the name or else we'll get, shadow banned and demonetized and maybe even kicked off YouTube. But in any event, that really changed the way people work. And I could tell you with certainty, right? I actually had a meeting with a very, very big and notable developer, a property developer last week. And he was saying the city of New York is going to run into a big problem. Because what's happening is the vast majority of workers are not coming into the office every day. They're maybe only coming into the office 2 to 3 days a week. So companies are downgrading their square footage, they're busting their leases, and they're all having a flight to quality to these brand new Class A office buildings like the one I pointed out today at 425 Park Avenue, if you want to look up that one. Also, to the Hudson Yards, because the theory there is if you ever want to attract your employees back to the office, you're not going to bring them back to a 1980s style dusty cubicle. It's going to have to be these Class A beautiful office buildings like you see at the Hudson Yards. Prime example, KPMG dumped their space on the east side and moved into a beautiful office space in the Hudson Yards. So you're going to have tons of vacancies in these older buildings, and I don't know what these landlords are going to do. I don't know what the owners of these buildings are going to do because it's going to be very difficult to convert them into apartments. Additionally, the second part of the question is, I think we got to really, really be careful. I think the term REIT, Real Estate Investment Trust, is very broad. There's a lot of publicly traded REITs that maybe is a REIT for single family, maybe is a REIT for multifamily, right? Maybe it includes retail in there. So I think if you're looking at and analyzing a REIT as an investment opportunity, you really need to do the diligence on the gross exposures to those specific asset classes. Because retail, depending on if it's managed correctly, is really tough in this environment especially. And even especially after the Amazon effect, I think retail is hard to turn a profit on. And what I sort of went through explaining with multifamily, I think we're going to see a big problem coming down the line with a lot of very smart, sophisticated investors like the KKRs of the world, the BlackRocks, the Blackstones, that in 2021, you can go look this up for yourself, they were accumulating like 10,000 units, right, of these really solid properties, Class A real estate properties. But the problem is they used all floating rate debt on those deals. And as rates are going up, I don't think they anticipated the swiftness in which the Federal Reserve would raise rates. And I think their risk profile was, okay, we think the Fed could potentially raise to 300 basis points or 3%, but there's no way they're going to 6%. Turns out right now we're almost at 5%, right? So they're like, okay, even if that happens, actually we'll go out the other way. I'm going out the wrong way. I think their thought process is, even if that happens, okay, no problem. Unemployment is at 3.4%. We'll just raise the rent on our tenants. I mean, after this debacle, I think you could have a severe spike in unemployment, and I don't think the tenants will be able to absorb those rental increases. So I think there's actually going to be opportunity within the next couple of years to maybe even capitalize on buying distressed properties and really good cash flowing real estate. So I don't know, I would be very careful about buying a publicly, in my opinion. It's not advice, I'm just giving you my opinion on it, but that's what I would say. Hey, Blues Writer, thank you so much for your $10 donation. Says Tom needs a new umbrella fund. I appreciate it. Now, I think, in all honesty, I think my umbrella is good. I think the handle just fell off. But I do appreciate your very kind donation, Blues Writer, as always. Always appreciate you joining. Wow, Chris Tompkins says, Tom, San Francisco posted a report saying they are in danger of losing 30% of their tax budget. Seems like a bad sign. Agree on REITs, munis in trouble as well. 70s might happen again in New York City / San Francisco. Chris Tompkins, thank you again for your donation. I have a follow-up question for you. So you said San Francisco posted a report saying they are in danger of losing 30% of their tax budget. Did they give the reason why? Is that what is the thesis there? Is it because people are moving out? Is that the reason? Because if you think about like a place like San Francisco, a lot of tech workers, right? So if you can work remote and be a software engineer, someplace in, let's say, Texas, and you're still making that same salary that you can in San Francisco, I mean, you can actually live in a normal house. Right? I'm not trying to say that in a mean way. I mean, I'm from New York. I'm used to living in a closet. But if you can keep your same software engineering salary, somewhere in flyover state, you can have a pretty nice quality of life, and you don't have to pay these like $5,000 rents for a one bedroom. So yeah, I mean, I think we're going into the unknown, man. Oh wow, Chris Tompkins says 70% of the city's budget is commercial real estate tax. Well, that's a big problem because, yeah, I mean, I really think we're entering into a world where a lot of companies aren't going to need as much space, right? And the space that they need, they're going to fly to extreme Class A buildings. An example right out here, One Vanderbilt. If you go right here, this is another one of those brand new, I mean, really gorgeous. I mean, you can't deny that. Class A buildings. So, if you're spending 30 grand on your lease for a huge space in a 1980s building, well, why not get a little bit smaller square footage in a brand new, gorgeous, state-of-the-art office tower, and maybe either spend the same or a little bit less and save some money? So, yeah, I mean, I think a lot of big cities are going to have that problem. It's definitely not good. I don't know what the solution to that would be, to be honest. All right, let me get my umbrella back up. All right, let me read some of the chats. Hey, Mike C. says California is highly dependent on capital gains tax payments for its budget as well. I did not know that. Tariq Khan says Cali is for the dogs, so is Newsom. Oh man. Bill says good, San Francisco needs housing density. Market will convert commercial to residential. Now, for anybody that may have a little bit better knowledge on real estate than me, in terms of the development side, I've been hearing a lot of conflicting stories in that, but that comment that I just read was really popular. Is really popular to me. Let me see if I can find it again. It was from Bill. It says San Francisco needs housing density. Market will convert commercial to residential, which I agree, dude. I agree. I mean, New York City, in New York, right? Not to just move the subject from San Francisco to New York. I think we're going through a similar crisis here, that the rents are so crazy. But I've always talked about the idea of converting the commercial to residential. But a lot of developers that I've been talking to lately say it's going to be a lot harder than you would think. Number one, assuming how old the building is, it could have an asbestos problem. And I don't know all the regulations and the rules, but there's a lot of office buildings, I didn't know this, in New York City that have asbestos in them. But what the regulation is, if you're not living in the building, you're not exposed to like a very dangerous amount. But if you're gonna, start blowing down walls and replacing things and making it apartments, that could be ridiculously expensive, like extremely, extremely expensive to remove all the asbestos. And again, I'm not an expert on it. I don't know, but I think city governments, right? So the city in New York, and maybe even New York State, and the reason why I'm speaking about New York, I'm not familiar with San Francisco, but I'm assuming they're probably similar issues. They're probably going to need to throw huge incentives to do this stuff, right? In the form of tax incentives or something, because, there's no reason why we should have office buildings in New York City completely vacant while at the same time having record amounts of homeless people on the street. I mean, does that just make sense? I mean, it makes sense to me. So you have tons of vacant space, right? We have the space. It's just, how do we convert the space? That is the problem. So I don't know. We'll see. That's another thing that I'm concerned about. Well, I'm not concerned. It's always going to happen in New York, but the amount of people using public transportation has declined significantly, and we haven't really gotten it back. So you're going to have, it's one of two things are going to happen. It's either we're going to have reduced service, so impacted service, or they're going to raise taxes on New Yorkers to fund the system, right? Because if you don't have riders and nobody's paying to take the subway or the buses, like we have the M3 bus, well, they're probably going to raise the fares on us again. So TechBex has overbuilt city centers. Read Urban Politics. I'll take a screenshot of that and I will look that up. Angel Perez says Tom Eric Adams says he has a plan apparently. Hopefully he does. Got Yours says, I love that my real estate brokerage is virtual now. With e-docs and virtual meetings, it works so much better this way. Oh, team, my thing died. Well, I guess that'll be a good place to end. We'll end over across the street. But yeah, ever since, a lot of the times when we live stream in the, I should say in the rain, for some reason, if the gimbal gets wet, it'll turn off. But let me see. Maybe I can make it all the way back for you guys. Let me see. Let's see how stable it is. There's some homeless people in Florida. I'm seeing some comments about that. There's some, but it's not as much as here at all. But guys, we're coming up on the 2-hour mark. So let's just give the prediction, because tomorrow is CPI day. I think we covered a lot. It was a pretty good live stream. Any predictions for CPI? Do we think the consensus on Wall Street is for 6%. Do we think CPI is going to come in above or below 6%? Let's see. I think we're going to come in line. And I think the Federal Reserve next week is going to raise interest rates by 25 basis points. So got yours is 6%, Mike's is 6.1. Made Ghost is below. 45 says inflation is going to go above. Lex says the CPI is coming in hot. Tariq Khan says below. Bree Grams is above. 6.3. Lupe with 10%. I think the market would crash if we came in at 10%. Zozo Bob's is 6.2. So we're all right around the ballpark. Hey, Dr. Longus is 6.1. Love that. Brad Brains